midweek market minute. It is January 17th. Let's go ahead and do a little spot check on the markets today, see how things are going. Here we go. So currency strength, we've got the pound and the dollar on top. Had some nice profits rolling into our flex trading room this morning. Pound Aussie hit a limit target. Here is the flex stock right here. We closed out for 232 pips on the pound Aussie. We're currently up about 240 plus pips on the pound New Zealand. We're up about another 200 pips on the euro New Zealand. We're letting these run. Risk has been eliminated on both of them, so we're going to let those profits run. Let's have a look at both. Pound Aussie made a nice little rip all the way up to these highs, and so I wanted to protect profit right at the highs. And so we did check the box there. I think we had a 9,300 target. It's up to 9,370. So obviously we forfeited a little bit of profit versus just putting in a trailing stop loss. But a couple things. If we have let's say we break, retest, and go, I'm still long on the pound Aussie up towards these highs at 2.00. There's still some room. I think there's some juice to run on the pound New Zealand. Pound New Zealand, obviously a nice stretch for today. But if we continue to run up here to these highs, that's around 2.09. I'm looking to take some profit at 2.09. Same thing. If we have score the point, pull back into this area, I'm looking to level myself back in and then look for another push up to these highs at 2.16 on the pound New Zealand. Euro New Zealand, similar, not the same, but similar. We're long in both. This one has room to run back into this low or this little pocket candle for another maybe a few hundred pips to 7,900. I'd like to get to 8,000. I'd like to see if this one has room to get all the way back to this high. So we built off this indecision low. It's starting to take off here. We go up. If we pause or pull back, looking for some ways to add in and then look for some more upside potential. Ideally getting profits set in around like 8,200 or so. I don't need to take this all the way back up to 84, but it'd be nice if it gets there. So I'm long pound New Zealand, long euro New Zealand. Those are working out well. It was nice to have a profit hit. I'm still long on everything against the Swiss. So we have the Swiss near the lows today. We have JPY, Aussie, New Zealand, and Swiss all week. We have the CAD, euro, dollar, and pound on top. So let's have a quick glance at those Swiss pairs. So Aussie, Swiss, nice little indecision candle today. Let's see if we can hold these lows. I'm still going to maintain that long position. CAD Swiss is working its way off these lows pretty nicely. So the low here at 63, we're trading up to around 64 and change. The Euro Swiss is moving well off these lows. That's 92.50 all the way back up to 94 and change. So almost 200 pips off the lows. Is that right? Yep. So almost 200 pips off the lows. Pound Swiss and the dollar Swiss have both made some really good surges off these lows. So this is 106.50 all the way up to 109 and change. I mean, that's a 300 pip move off these levels. This would be another trade for Forex that I'd love to see if the pound Swiss can make this recovery, come back up to this high around 1150 or 1200, and then any pullback I'm looking to add to it and trying to take this back up into this cluster of support resistance around 1600. So this would be another bullish pattern that I'm looking for. Left shoulder, head to neckline, or if it's a crown pattern, it's got to break the high, but something like that, where we can measure some symmetry, getting this trade up to like 1600. New Zealand Swiss, Aussie Swiss are both kind of stalling right now, but I still like long. We're going to see if this level holds these lows around, 5,200 or so. And the dollar Swiss, well off these lows. We had lows over the holidays at 83.38. We'll just say 83.40. And here we are trading at 86 and change. So about 300 pips off those lows. With the trend line to break, that would hopefully be a nice confirmation for us to maintain a long position. So if we come back, to this trend line, pull back on the right-hand side of it, I like that push to the upside. Minimum target would be the highs at 92. We still have a big old pocket right here at 98. It's really 96 to 98. It's going to be a profit level for me, but ideally I like to try to hang on to this thing. If we have a fifth wave, whatever I can measure out account symmetry-wise, if we have a wave towards 1.00, that's going to be my profit target on the dollar Swiss. I'm staying out of yen crosses for right now. We've got some positions running. I think there's 8 or 9 positions I'm exposing in currencies. Stocks, let's switch gears here to stocks and options. So did an earnings play this week on Alcoa. It still, earnings hasn't even printed. It's actually today after market. And Alcoa is going to print, earnings. It's going to be, revenue growth, earnings per share, stuff like that, hit or miss. So part of me wants to stay open for it. I am going to stay open for it in one of my accounts, my Tasty Trade account. I'm going to hold it open. I just did a slight strangle on that one. Let me show this. So my tasty trade, here's one of the highlights of the position. So I have the $28 put long and the $29 call long. I'm flat right now in the position. It's up, it's down $6. But post earnings, we're going to see if the, call side, put side pays out, 29 to $28. So we'll say 28.50. I need to get a move of, basically $3. I think I paid like $2 and change for the debit. If I get a move down, if this drops to 26 or 25, great. I'll have $3 of intrinsic value on the put side, so I can close it out for a profit. So if I paid $2 for the debit, I'd be happy with 50 cents or a dollar in net profit per contract. But that's Alcoa. The other one I was looking at this week with TSM, Taiwan Semiconductors, still pretty quiet. I just didn't like how it was priced out today. So in the trading room, I talked about a potential trade, which means I'm not going to take it. I priced it out. It's the probability of profit's pretty high. I mean, for a move that's expected to be probably 4.75 to $6. So the weekly ATR is 477. The average move the last 9 earnings reports has been around 6%, which translates to about $6 a price movement. So if I'm paying for roughly a slight strangle here, so if I buy the 101 call and I buy the $100 put, it was 455 debit. There should be probably a $5 to $6 move coming on average, especially if you went out to the 26th, which is next Friday, not this Friday. I think this is possible that you could squeeze 50 cents or a dollar out of this position, but I just didn't like the way it was trading. I didn't want to throw out 455. And here's the reason: we're just getting started for earnings season. I don't think there's any reason for me to get super aggressive right now. I have some exposure on the IWM. I have some exposure on the DIA. We're looking to take some trades on the SPY, the Qs in the coming weeks. We also have a ton of companies reporting earnings over the next couple weeks. If I'm not mistaken, so we have 232 companies reporting on next week, and then we have a ridiculous amount to wrap up the month. So 156 and 634. We have over 1,000 companies the last part of the month. And on top of that, we've got the Fed on the 31st. So there's still some notable companies I'll probably play in earnings on. United Airlines is one that stuck out. If I could, oh, not Under Armour. That's sorry. I need UA. So Airlines, United Airlines, UAL. There it is. So UAL is trading at 38. If I did an earnings play, I'd be interested in this. So we have this level that'd be a strong level support. We have our 2020 lows, which would be a fantastic level support. An earnings play that might push us down into that is fine. We might actually look at just some credit spreads as well. But if earnings is positive based on the strength of the consumer, that could be interesting. I'm curious though. I mean, I don't know how harsh of a winter it's been for all you out there in the world, but in the U.S., I mean, I just talked to a friend last night that's had like 4 consecutive snow days because the wind chill's been below 15 degrees negative in the Midwest, and I think their cutoff is like anything 15 below or worse. So if it's negative 15 or colder, they're just canceling school for cold days, not even snow days. So anyway, I don't know if that affects flights. I mean, travel industry can obviously be disrupted with cancellations, adjustments, and people get pissed and whatever. Point is, do I like the stock? Sure. I mean, if I were to rank a hierarchy of airlines that I like to play and like to own, I mean, Delta by far is the better airline to me to own. Financially, I think Delta's in a great position. If Delta came back into this area here around $32, I'm going to take some positions on it, and then ownership wise, would love to own Delta at the 2020 lows. This could be another trade that if we came back in this level, I'm going to take some stabs at it because if I'm right and we get that bounce, there's a lot of profit potential to the upside. There's also directional plays where we can, collect premium at these levels, get paid pretty well, have it staggered out over maybe 3, 4, 5 months, and generate some nice income on Delta. So area 1 and area 2 for potential buy spots on Delta. Look at UAL, and strong support here around $34. You're trading at 38. An earnings play might push us into that. So I'll see how it prices out going into the next week or two. Obviously, we pushed back into COVID lows. That'd be fantastic. LUV is Southwest Airlines. We had the big pop off these recent lows. This is another one that if there's an earnings play, which there is the next couple of weeks, an earnings play that either helps this move follow through or more trouble in paradise to the downside as we come back and test and take out that 2020 level. Again, doesn't matter, but if the position is priced out well, this is another stock that I'd be interested in looking for some ownership on. And it might take some time. Look, this whole move, by the way, could be one giant correction. So this is a big swing to the upside. This could all be one giant correction. We have a big base that's going to be built here with some range trading, but longer term, this looks pretty good. I told traders in my trading room a couple weeks ago, a lot of this airline stuff to me, airlines, cruise lines remind me of what we did in 2020. Let me go to Win. We did a casino trade back in 2022 that crushed it. So same type of thing. As we get a chance to, buy airlines nice and low, I'm going to do the same thing like I did in the casinos, which is we had like 5 credit spreads at these levels. Each credit spread was anywhere between like 0.5 and 1% risk, generated some really nice profits over like a 5 or 6 month period. It was Win and LVS, Las Vegas Sands, same type of thing. If this will load. Yep. So we loaded in right in here around that $35 area and had this thing pay us for months and months and months. So if I see airlines doing the same thing, I'm certainly interested in that. And the other two that I wanted to talk about today, coming up with earnings and big stuff, is Netflix. We've had some big runs through the holidays. Things have been pretty quiet on the volatility front for Netflix recently. So we're in this little range right here. I'd like to see if earnings can break it loose one way or the other. I know that their ad tier service or whatever they're going to do to possibly modify their membership might be rolling out, make investors happy. There's still lots of levels to eat back to the upside. I mean, who knows if they talk about like, hey, you're going to have an AI, movie picker in your Netflix account. Is that a good thing for the market? I have no idea. Maybe everyone's is so salivating for AI that who knows. But point is, I mean, if we have a range here, let me find this level. So highs around 500, recent lows around 460. We got like a 35 to $40 range. Obviously, I want to see if price can break above or below that. Earnings catalyst, I'd expect there to be. I mean, the average move on the week is 26.25. Earnings catalyst is probably going to be somewhere around like $40. So it's going to be close how it's priced out. But if we get a big break or big move up or down with a big surprise, that's worth trading. It's just a matter of how we can price the option and be willing to take that risk. So that's one of them. And then another one that's probably going to be pretty volatile is Tesla. I think that right now Tesla is having more harm done because of Elon Musk versus just their stock itself or the company itself. I mean, people still love the cars. I see them all the time. As far as I know, it's one of the better selling EVs. Problem is they've lowered the cost so much that their revenues are just dramatically affected. So I don't know. I think the lower revenue on your Tesla is mainly due to number one, cars don't have to be so expensive. Um, they got that way in 2020, 2021 based on shortages. But I think Tesla's also going for quantity. If they can have a reasonably priced electric vehicle that people want and the high demand is there, rather than charging 65,000 a unit, they can get 35 to 40 and people are happy. Maybe that's their play. Maybe this is more of a quantity market share play. But it's hurting the stock as of late. I still think that Tesla longer term, I mean, we can talk this all day, but look, if Tesla's up above $280, it's probably going to 440. So if I'm just patient on Tesla and all this is sideways and choppy and noisy, that's fine, right? Maybe it comes back down to this level. I'll buy it at 120, right? And there's lots of upside potential. But if we break above 280, yeah, that's still plenty of time to be bullish as well. So could be volatile, could be messy, could be noisy. I'll just take a couple earnings plays on it right now, or take a couple of option plays on it, not outlay a bunch of capital for it. But pretty clear to me. We get above 270, 275. I'm long. We come back into some really attractive levels here, back in our lows in 2022, or even over here at like 165 or so. I'm interested in taking some option trades on Tesla and holding it for the remainder of the year. All right. Um, any let me log. I mean, I guess I've just been talking nonstop, so let me log in and say what's up to everybody, and thanks for tuning in. Chris is here, Don is here, Don is here. What's up? I guess that's it. Nobody knows about this noon session, so am I just doing it for fun, doing it by myself? Well, eventually it's going to catch on. I've got the Discord up somewhere. Let me find it. I'll jump in and say we're live, everybody. Apparently, a couple weeks of heads up wasn't enough, so let me jump in here now. I'm live for the 12 p.m. Eastern Time midweek market minute. All are welcome to join. There we go. Okay, so we get some more follows in here, but if you are here, thanks for being here. Yeah, Jim. Jim's here. What's up, man? Herschel's here. All right, all good. And this is recorded and posted on the channel anyway, so I'm not that worried about it. But it just works out where we have a little bit more time together. I've had a lot of stuff going on. It's been busy with the sessions and looking at just kind of maintaining. Right now, I'm in a wait and see. I'm in a bit of a protection mode where I'm not getting crazy exposure. I'm trying to play a little bit more of the big catalysts. So we had our CPI traded around that. We had some good profit last week. I took a small loss in the IWM because it wasn't cooperating today. It expires on Friday, so I'm taking a small loss of like 40 cents. But we end up making like $2.40 net between the QQQ, the SPY, and the IWM was $2.40 a contract, which pays pretty well. And then over the next couple weeks, I'm looking into earnings, the big earnings week, the 22nd through the 26th, big earnings week, like huge earnings week, the 29th through the 2nd, plus FOMC on the 31st. So more than likely, my next big round of shorter term, 1 to 2 week trades on the indexes, looking for some volatility, was going to be between the 31st and the 9th, playing those levels in those time frames. All right. So we covered a lot of forex today, which is pretty good. And I think the dollar index is going to continue to run. So risk off flows, which makes some sense. Dollar gets stronger. Risk off type flows, and dollar heading higher means the stock market's probably going to struggle at these all time highs. So here we are at the SPY for the week. If I zoom in for the week, the SPY is down, right? So SPY is down in the week with a red candle. The DIA for the week is down, but not really. I mean, you can still see the indecision, right? So even though it's down for the week, there's still a high, there's still a low. It's just tight. But I do think that the market's going to kind of break this loose a little bit for at least a retest. Pull back to the 23%, pull back to the gain retracement at 30 or 38. Let's get one of these levels, then we can see if the markets are interested in buying that dip. Um, yeah, I mean, I'm kind of bearish on the market at least in the near term. But I'm going to play it pretty neutral with options, so that way if it goes up or goes down, we can still carve out a few profits and a few bucks. Fair? And then the IWM, I actually am looking to get more bullish on this one. Like I said, if I'm right, then I'm looking at holding that 187 to 187.50 level, and this looks to return to the highs and see if we can outperform. To me, this is a no-brainer above this high. We get above $200, I'm long IWM, and I'm going to look to see if this thing goes just ballistic to the upside to carve out all-time highs. Maybe I'm maybe I'm way off there. But it's either I'll take a stab here. I will certainly take a stab down here at these lows and just let this be a range trade. And it makes sense. Like this could be an uncertain times and nobody knows what the market's going to do. Well, if that's the case, then we buy low, we sell high, and we trade the ranges. If there's tight trading, there's tight consolidation areas, then we just adhere to the structure and we trade there. Okay. All right. All good, Trish. Thanks for being here. Appreciate it. Anything else? Anything else? Stock wise, so China's been hit pretty hard. We looked at the HSI this morning. We looked at the HSI, the FXI. So I mean this. So right now the index is down almost 4%. We're coming back into the lows of 2022. If we look further left on this chart, going back to the weekly, this is great financial crisis levels on the HSI all the way back to 2008, 2009. Again, I look at this as China's been a bit of a sleeping giant, sleeping dragon, and all they need to do is be a little bit more vocal. And I think this, position gets held. I don't know. I think that there's a lot of like scary sentiment. I wish I could see this actually. We do so much with something like the AAII sentiment report. I wish I could get this for China. Reason why is I'd like to see kind of the overall investor sentiment towards China, because if it's super ridiculously bearish and like it's uninvestable, I'm probably going to take buy positions. Because similar to that, where it's like it's uninvestable and then the market jumps up 40%. It's uninvestable and it's getting to this like capitulation move to the downside. I mean, look, I guess I'm kind of what I do in forex. If I find a good level in technicals, I'm looking to buy low. Obviously, I'm looking to buy low and buy as low as possible. But maybe I'm too early right now. Right? Maybe wanting to get in and participate now is too early. Maybe the best thing for me to do is wait for the dust to settle, wait for this thing to be a right side of the trend line, and just trade that. And I don't have to sit here and stare at it like, oh, I got to find it. I got to pick the bottom, because I don't. But we did get some exposure this week on FXI, which is large cap tech, and we have a trade here. So we have the 23 by 2250, we have the 23 by 22. These are staggered out through Q1 and Q2, so March to June. Coming back into the same lows in 2022, we go back into the 2008 2009 low, same thing. So I'm interested in buying these areas, and we'll see. Right. So if I'm right, cool. If I'm wrong, I'll lose a couple dollars. Not a big deal. But if I'm right, couple dollars and more confirmation, because I think there's plenty of room to add. And same thing is true. I took another trade on Baidu today. We're trading at 101, and I took in a 105 by 100 for $2.60. So this is kind of my last little line in the sand for right now. If this level holds, yippee skippy. If it doesn't hold, then I'm starting some new. I'll probably put 3 to 6 trades in this area staggered out, and try to establish a position around this $80 handle. I do think this level holds, then we go from 80 back to 150. I mean, who would not enjoy 100% upside potential? Doesn't mean I'm going to make that on my account, but having maybe 3 to 5 trades out, maybe risking 5% total, I could probably generate 10% profit. So anyway, we'll see. But watching, and that's probably what I need to do, is watch more than act, and just be patient, right? So I could put another trend line here and just say it shouldn't really be something that we want to get into until we have better confirmation, which is fine. But I also like, technically speaking, if we get a level, I could have income for months by just having a nice technical level we can position from. Okie dokie, all good. Okay, if you have any charts, questions, thoughts, concerns, let me know. Let me chime in here too. We got Lucky Duck rolling around in some posts in Discord. Fear and greed. That's a CNN index. Where are we at? I'm guessing we're interesting. We're still showing greed, huh? So this is the CNN index for greed. Extreme greed typically means bearish, and this is the AAII sentiment survey, and we're still in the bullish territory. It's not super extreme, right? Like the bullish high is at 53%. That's when we started to peak. The bearish high is at 50%. That's when we formed those bottoms in October, November last year. So, I mean, it's definitely favoring more bullish. I think a pullback is good, but I think the dips can be bought. I'm not bearish on the stock market outside of a short-term correction, looking to buy some dips. So we'll see. But inflation. I'll say this before we wrap up for the session today. Inflation numbers have been an interesting story in the background, right? We expect the Fed to cut rates, and the December rate decision for this year is anticipated to be all the way out to 350 basis points, which is like 150 basis points lower than right now. So the market's still anticipating the Fed to cut. Now, two ways this works is the Fed can cut consistently over 5 or 6 meetings and get us down to 350 basis points to 3.5%. Or what we're going to start noticing over the next couple of weeks is, let me go into the watch tool here. This for January is expected to be a pause for the Fed. This for March has shifted down quite a bit today. I think we looked at this morning. In fact, I'm going to timestamp this because this morning, oh, darn it. I'm okay. I was curious this morning. I think it was 58% this morning. Now it's down to 52%. And so this is the anticipation of a March rate cut. And this keeps going lower and this keeps going higher, which is suggesting that the Fed may not be cutting in March like everybody thinks. Again, another reason that the market would react somewhat sour. Maybe that's a stronger dollar and a weaker, broader market for right now. But the Fed can reiterate their message in January, whether it's dovish or hawkish or neutral, we'll find out. I'm sure Powell's going to be very calculated, as he always is, but we're going to watch and see how this is changing because it's going to be important how we trade. Okay, so we'll keep an eye on that one. And then after the January meeting, we'll see how this affects the March decision and anticipation with probabilities of where the Fed's going to be. And then also the end of the year, if they're still looking to be all the way back down to 3.754%, which is 150 basis points that I'm talking about. But like I said, inflation higher year over year for the U.S. than it was previously. We had 3.1, now we're 3.4. Higher for the CAD or Canada, and higher for the UK. So I'd say that over the last week, we have seen the term sticky really hold true, right? Because we're not 2% in the U.S. We're not sub 3% in the U.S. Yes, deflationary pressures are still existing. I know that shelter is lagging, but if the readings are the readings and the numbers, we're still not sub 3. We're nowhere near 2% yet. So I think per Powell's legacy, whether he's going to be a good guy, a bad guy, I don't know. But I think that nobody wants to see, 6, 7, 8% inflation in the U.S. Nobody, right? It'll squeeze everything. It'll be the soft landing will have the rug ripped out from underneath it. We'll go into a harder recession. It might be a harder, deeper, faster recession than we had in 2008, 2009. But I think something pretty ugly is going to happen if that is the case. We've so far avoided that. I say that like avoided it in a way, but it's been this weird like sector by sector kind of rolling recession where certain sectors hit at different times, but not holistically, right? So anyway, lots to navigate. Okay, I'm going to wrap it up for today. Thanks for being here. Just remember, look, spread the word. We're going to be live on Mondays and Fridays. Monday was a holiday. I've been sick this week, but no big deal. I did a video. I posted an all markets a video update on Monday on my YouTube channel. Wednesdays at 12 noon for a little market minute during lunchtime at 12 noon, and then Fridays to wrap up the week at 9 a.m. Right? Still business as usual. Earnings are kicking off. We've got busy weeks ahead. Looking forward to it, and I'll see you soon. Thanks for being here with me today, and happy trading, lots of profits. Take care. Bye.